Hello everyone, Justin with Deep Dive Stocks here, and today we're going to be doing a weekly review of the weekly chat that was sent out last Sunday for the week of December 12th to December 16th, 2022. This is a pretty interesting weekly chat, namely because something that we have been waiting for quite a while has finally occurred, and it has some pretty profound and significant consequences for the market at large. So let's go ahead and get started. As usual with the weekly chat, we start out with a investigation into SPY's VoEx. VoEx, if you're not too familiar with it, no worries, but it's designed to measure instability on a stock, and it works for ETFs as well. If you would like to learn more about VoEx, I'll go ahead and put a link to the video in the description below. The event that we've been waiting for since the start of August of this year has been VoEx rising into the inhibition zone and then subsequently falling into the propagation zone. This is something that has been characteristically associated with the end of rallies. So, since the data from the Friday before on December 9th showed that the VoEx had fallen into the propagation zone, this is a pretty long-awaited outcome for VoEx. The consequences indicate that the rally has ended, the month or 2 month long rally that we've been experiencing, and that we can expect another leg down in the market. Now, this in and of itself is a pretty profound data print, and truthfully, you could pretty much end the weekly chat there. But like all good scientists, we want to make sure that we're not missing any data, and we want to try to find data that disproves our theory that the rally is over. And that is exactly what the rest of the weekly chat attempted to do for the weekly chat of December 12th. So let's go ahead and look at some of the other data. To get a more objective look of VoEx when sometimes its visual inspection might be a little subjective, we can turn towards the snap graphs, which give us an algorithmic output of VoEx's behavior with relationship or with respect to the stock or the given ETF's future price outlook. And the snap graphs show the relationship between the current VoEx behavior and future price action that has been seen on the stock before. So here we see on all 4 timeframes for SPY, the crosshairs are below the gold line, which show that even the snap algorithm is interpreting negative outcomes due to the recent VoEx behavior. So this gives us a 1 month, a 2 week, a 1 week, and a 1 day bearish outlook for SPY. The first piece of data that we encountered that may go against this outlook is the Gamma Hedging Heatmap. The Gamma Hedging Heatmap shows us when options dealers have to sell shares or when they have to purchase shares. From the data on the 9th and the outlook 5 days ahead from the 12th to 16th, we did note that there was some purchasing support to be found if the index did fall and experience an increase in volatility. The problem, however, was that purchasing support provided was located quite a bit away. So even though there was near-term purchasing support visible, whether or not we would actually reach that in the event of a spot down event was dubious. And if we look at the progression of SPY throughout the week, we see that is exactly what happened. As SPY began to fall, it never retouched the purchasing support because volatility never moved sufficiently to move the index towards the blue. And naturally, this is problematic if there is little organic bid on the index or throughout the market. Without the options dealer's passive bid, the index or stock or equity just naturally floats down, which is exactly what we saw. Next up is a curious data print and one that is becoming more fascinating to watch with time, and that is the growth or destruction of, or the rate of change of the dealer long puts on both SPY and QQQ. Traditionally, as you can see in these graphs, these two indices typically see very similar behavior when it comes to investors selling puts on the indices. But lately, SPY has seen a decrease in that activity, whereas QQQ's activity has been increasing. This can be problematic as well because when we did our investigations into dealer long puts and their behavior and impact on the markets as a whole, we did note that a persistent and continued selling of puts shifted the outlook from a bullish outlook to a bearish outlook. And the idea is that as these puts get sold in both consistency and quantity, that starts to destabilize the foundations of the market as well as overexpose the market to effects of volatility, which, although suppressed right now, isn't a guarantee that it will stay that way. So this diverging behavior between SPY and QQQ, or rather the diverging behavior of the investors or traders partaking and playing in those two indices, has grown, and it has been quite interesting to watch. we can in fact see already the immediate differences between the hedging environments that this behavior is provoking when we look at the heat map for QQQ, which is pretty significantly different than the heat map on SPY. In a very similar theme of looking at the market as a whole, if we look at the market-wide gamma squeeze counts, which we did in the weekly chat, we see that the trend line, or the overall rate of change of the gamma squeezes in the market, is finally above zero. You'll also notice that this is classically associated with large downturns and persistent downturns in the market. So walking into the 12th, we had quite the number of bearish data prints, and this one is pretty bearish indeed. We can see just how far north that line is above zero. One of the newer metrics and data from deep dive stocks is the gamma squeeze trending metric, which is a way of measuring the number of stocks that are trending towards being in a gamma squeeze and kind of the strength or the vigor that they're doing that with. The idea is that if the market's foundations are beginning to become destabilized or crumble, we should start keeping an eye out for the stocks or the signs and symptoms that point us to that. And since we know that gamma squeezes destabilize a market, it makes sense that we should look at to see and try to quantify how many stocks are sliding towards that known instability. And here we see that the gamma trending metric is printing very bearish outlooks because the overall number is below zero, trending deeper, and this is associated with large scale market downturns as well. So overall, walking into the week of the 12th to the 16th, the data prints were both bearish on the near, medium, and long terms. The near-term bearish outlook was mitigated a little bit again with the Gamma Hedging Heatmap, but again, we noted that the hedging requirements were found only after a pretty substantial drop in the indices. But this near-term bullish support, I'll call it, not even a bullish data print, is quickly counterbalanced against the fact that VoEx is now fulfilling the expectations that we've had for it for the past 2 months, almost exactly how we expected it to occur. The number of market-wide gamma squeezes are increasing quite substantially, which is a known bearish, very bearish data print. And the dealer long puts are exhibiting some strange and unusual behavior as well on QQQ. It is having some pretty persistently elevated activity. As well, we see with the market-wide gamma squeeze trending metric and just the market-wide gamma squeeze counts that the numbers do not look good. So it shouldn't be too much of a surprise that we walked in on Monday into the market on the 12th with quite the bearish outlook, and that is precisely what occurred. So that's all I have for you guys on this week's weekly review. If you guys like this type of data, I definitely recommend checking out, maybe becoming a member. These premium or these weekly chats get sent out to the premium members every Sunday, and yeah, I think they're pretty cool. I enjoy writing them. I've gotten some pretty good reviews from them. So again, if you like this data, maybe give it a consideration. Otherwise, I hope you guys have a good week, and I'll see you guys next time. Bye.